Good morning, Steve Reed with the Morning Grain Comments. Markets are trying to rebound from yesterday's losses. It seems like, first of all, Goldman Sachs came out and said that the new virus is not high risk. So the market is back risk on, trying to regain some of the losses that we saw in the stock market, some of the losses that we saw in crude, and some of the losses that we saw in grains. As far as the grain market is concerned, yesterday we got a lot of weather data. NOAA came out with their 30-day outlook for U.S. warmer and drier conditions. Our weather guy feels that the latter part of December, we could get colder than normal. He came out yesterday with a 90-day outlook for the U.S., which suggests late in the period it'll be drier and warmer across most of the southern plains and parts of the western corn belt. He also came out with a 90-day forecast for South America, and basically normal conditions across central and northern Brazil, but southern Brazil and Argentina could see some drying. And we're already seeing that on the maps. We saw some pictures yesterday of Rio Grande do Sul corn that looks quite a bit under stress. Again, no one's really expecting any changes in the USDA's crop numbers from South America on December 9th, but it is worth watching. We also note that ethanol margins continue to be strong. The March spread is now a penny over the March, and suggests that cash was going to remain strong as long as futures cannot do the job of putting corn to the domestic pipeline. Exports, we're still concerned that USDA on December 9th might lower U.S. corn, soybean, and wheat export numbers and raise carryouts. We're watching pretty closely China demand for especially beans, but Brazil right now is a little bit cheaper as far as exports to China from now until February. And in January, where they have 138 million ton crop or 144 million ton crop, there'll be a lot of beans available for export to China. We'll also be watching pretty closely U.S. corn export demand. Some people feel that Ukraine and the Argentina prices are cheaper than U.S., cutting into our export demand. We also look at world wheat numbers, and the Black Sea really didn't break, nor did the Matif wheat futures break as much as our futures. They're holding steady in Europe because of declining stocks due to very large increase in exports, which suggests that their carryout at the end of the day is going to be smaller than last year. There's no real defined price for Russian exports of wheat for December, and no sellers for January. And again, for both corn and wheat, I think yesterday we pushed below some support levels on money flow more than fundamentals. Both corn and wheat are back up near the 20-day moving average, and we'll see if the market could put some more supply loss premium in the marketplace ahead of the December 9th report. And as far as the money flow, big changes yesterday. Funds selling over 20,000 contracts of beans, of oil, soybean oil, and wheat. USDA did not announce any mandates on biofuel at the deadline, and Brazil announced yesterday they will not increase their biofuel mandate, which offered some weakness to the soybean oil market. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. Remember, always treat people like you yourself would like to be treated.